there's just no other way to put it. U.S. imperialism, it's living on borrowed time. It can't project the power it once did because its economic foundations are fundamentally unsound. Let's start with the national debt, which currently stands at nearly $37 trillion. And every 3 months, another $1 trillion is being added to that. Now, along with funding the wars in Afghanistan and Iraq, this amount that's been built up, I think there was a balanced budget. There was no deficit under Clinton. Just like 25, 30 years ago, in that short span, they've added all this debt. And it's because they had these wars. And then, of course, both parties, administrations of both parties, they've kept taxes on the billionaires low and military spending high. So to make ends meet, the government has to keep on borrowing new money to pay off the debts that they made earlier, that they took in earlier, plus interest. So in 2024, last year, the government had to borrow $1.8 trillion to cover the difference between income and expenses. Like about a third of the total budget they had to borrow. Now, interest payments alone, just interest, amounted to $1 trillion, which is more than the entire military budget. But it's basically a legal Ponzi scheme. You know, when there aren't enough new investors to pay back those who got in earlier, then the whole house of cards could collapse literally from one day to the next. And the United States, the biggest, most powerful country on earth, could literally go bankrupt and default on its debts. And that's why, for the first time in history, all three credit rating agencies have downgraded the U.S.'s sovereign credit rating from AAA, from AAA to AA+. Now, that might not sound like much, but it does matter. And why? Why does it matter? It matters for the same reason your personal credit report matters. If people start doubting your ability to repay your loans, they'll charge higher interest to make up for the increased risk, or they'll stop lending you money altogether. So it might only be a minor downgrade for now, but the fact that it's happening at all to the world's biggest economy is, again, a big deal. Financial markets tend to be extremely efficient. They're ruthless. I mean, after all, maximum efficiency in the pursuit of profit is their lifeblood. But the verdict is in. The markets, and especially the bond markets, are not impressed with Trump's policies, including his tariffs or his big, beautiful bill. Now, the bulk of the national debt, it's held in the form of U.S. Treasury bonds, which have always been seen, or for a very long time, as a safe haven investment. After all, what could be more stable, reliable, and trustworthy than the U.S. federal government? Well, you seem to have your doubts. Well, many domestic and foreign lenders are also not so sure about this. So instead of parking their money in U.S. treasuries, they're buying real estate, armaments, precious metals, and crypto. And again, this marks a huge shift. The U.S. dollar has been the world's de facto reserve currency since at least the 1920s. But of course, the U.S. has abused that position in many ways. So just to give a couple examples, there's a thing called SWIFT, which is the global messaging system that allows banks to trade money between different countries across borders. But the U.S. has used that to monitor trade and to enforce sanctions on countries like Iran and Russia. When the Ukraine war started, the U.S. and its allies, its Western allies, they froze about $300 billion in U.S. central bank assets that they had deposited in their jurisdictions. That's roughly the equivalent of the GDP of Finland. That's basically been hijacked from Russia. Now, that's a big amount of money, and billions of dollars have accumulated in interest on those deposits. Some of that interest has been expropriated and given to the Ukrainians so that they can fight the Russians. So, instead of greasing the wheels of world trade, these tools, the dollar, SWIFT, everything, they've been weaponized to undermine U.S. imperialism's rivals. And so the so-called rules-based international order, it's more like the Wild West, where the U.S. makes up the rules as it goes along. And so this has, of course, led to the rise of alternative interbank systems like BRICS Pay, it's called, or just direct exchanges between countries in their local currencies. So that's why we're now talking about de-dollarization. And again, it's an almost entirely self-inflicted wound. The bond market works like this. When demand is high, people want bonds because the risk is considered low, then the interest rates are also low and the government has to pay less in interest. But when demand is low because the risk is considered higher, then the interest rates rise and the government has to pay more. So when the trade war started, Trump assumed that all this uncertainty would sort of stampede people into buying good old safe treasury bonds, which would then lower the interest rates on that $1 trillion interest that they have to pay every year, and that would help them save some money. But that's not what happened. Instead, people started selling those bonds off. The Japanese started selling a bunch of bonds, and they're the biggest U.S. Treasury holders. After so many zigs and zags and so many threats, they just simply couldn't trust the United States anymore. So Trump had to back down very quickly. Now his so-called big, beautiful bill, that's projected to add another $3.8 trillion to the deficit. That would bring the debt to GDP ratio to its highest level since 1790. Not 1970, 1790. I mean, that's crazy. Basically, since the Bill of Rights was adopted. And so some people have called this bill, it's a road to nowhere. It might pad his reputation a little bit for the rest of his term, but it won't actually reindustrialize the country or enrich the majority, which is what he promised. If you look at the details, it's actually yet another cash grab and a net transfer of wealth from the many to the few. So, where's the money going to come from for future spending and debt servicing? There's only a few alternatives. They can print more money, they can borrow more money, they can raise taxes, or they can cut spending. Now, inflation has already been spiked by what they called fiscal stimulus and quantitative easing, which is basically just printing money and putting it into the economy. So they're not likely to do that again in the short term, although I would bet at a certain stage they're going to have to do that anyway because they'll have no alternatives. Now, raising taxes obviously is a no-go politically, so something else is going to have to go, and that means that the very few remaining social nets that we have in this country are on the chopping block. But that's not going to be enough to have the savings, so they're going to have to borrow even more money and pay even more interest after all, which is all going to further aggravate their problems.